all of our option trades for today. Today is Friday, March 10th of 2023, and we did a bunch of trades today. So I'll start off with the trade we did in our small retirement, our small option trading account. This account is around 30,000 in value. So we did one trade here. Here you see that we rolled the Realty Income ticker symbol O, March 17th, $65 covered call option out and down to April 21st, 62.5. So let me show you why I did that. Here you see the charts of Realty Income. This is the daily chart. And notice that Realty Income, it had been in a nice uptrend since going all the way back to early November. But a couple weeks ago, it broke through that downtrend. So we're trying to see if it was going to find support right around this area here where it found support back in December. Well, unfortunately, today it broke through that support. You see that that support was right around 62.5, $62.43, somewhere around that $62 range. Once it did that, and it did it on high volume, I decided to go ahead and roll this coverage call strike price down, because now what will happen is Realty Income will possibly continue to come down, and then it'll possibly rebound, and that area there that was serving as support for it will most likely turn into resistance, at least temporarily. You see that it did serve as support for it here when it came down here, went back up, but then when it came down to retest, now it broke through today. So we decided to go ahead and roll that cover call strike price down. We see this fairly high volume on the selling pressure the past few weeks. So I feel like this is a better strike price, gives us some nice money. We were able to put $1.40 into our pocket for rolling it down by $2.50, and we also lined up to receive the dividend. I think it's just under 30 cents per share. It's a monthly paying dividend stock. So that's our one trade in our small account. Now moving on to our larger account, we did a lot of trades in this account. Let's start out with our Disney position here. So here you see that we bought the March 17th 100 cash secured put option, and we also bought the 105 call option, and we rolled both of those down to the $95 strike price in April. We were able to go out 1 month, collected $2.38 per share for that. So let me show you what's going on here with Disney. So Disney had a nice advance, came down, was finding really nice support right here around 98, just below 100. Did that for a couple of weeks, was looking really good until today pretty much. Even yesterday, it broke through this little area here that had served as support for it. So I knew then the position was probably in trouble. Volume's increasing as Disney's dropping. So because of that, I decided just to go ahead and let's just roll this strike price down. I don't believe the 105 is anywhere close to being in jeopardy right now. There's no earnings coming up during April. So decided to go ahead and roll that down. So now we've rolled this down to right at this area here. You see this kind of light yellowish color line. That's the next area of support. And it found support here right around September of last year. Notice it's broken through there. And now it's broken through again. That area that was serving as support for will most likely turn into resistance when it comes back up. And the question is, how low will Disney go? Well, the next area of support is going to be right about in here. So right about the $90, $91 area. See, it was sort of support for it here in October. Also going back to July of last year. And then just above there, it is another area of support right here around 92 where it's currently at. But both of those are under our $95 strike prices. So that's why I felt comfortable rolling these strike prices down. Gives us some nice cash. Now over on the weekly chart, we still have the possibility of Disney being in an uptrend. As you see that it made a higher high here, made a higher high. If it can make a higher low anywhere in here above this previous low, which is right around 83, 84, as long as it makes a higher low, then we're still in a nice little uptrend on our weekly chart here. So we'll have to see how this position plays out. But right now, the daily chart isn't looking all that great. It did make a higher low here, but then it came back and now it's made a lower low. So we're back into a downtrend on this Disney chart. All right, looking at BLK, another position. The banks really got hammered this week. Financials were absolutely destroyed this week. It's a tough week for financials, and that BOK was BlackRock was right along with them. So you see that we bought to close the March 690 cash secured put option, and we rolled it down by $20. It's a nice roll down, but we had to go out to June to do that. So I don't like going out that far, but if it means us getting a credit, which we were able to do, we collected $5.40 per share, or $540, then that's what we have to do. Let me show you why I did that. So again, everything was okay. It was holding its own around 670, 680, but then 2 days ago it broke. So now the question is, how far will it go? Well, the next area of support would have been right around here, around this 665 area, push through there. So the next area of support is probably going to be right here about where it's at. which would put it right here at this low from back in July, which was $620.28. We're getting pretty low, pretty close to that. Now the strike we sold was actually the 670. So we are still right back in here in this area that had been serving as support for it, and almost like it turned into resistance. But I didn't want to go out any farther. June is far enough. We got a decent credit. Now we'll just see how this thing plays out. It can keep going down, and we'll just kind of ride this thing out till the time value is gone, and we'll adjust it on down the road. We have plenty of time to let this position roll out and see what happens. So we're able to improve our position by $20 per share and pocket $5 more. This is a nice way to deal with the position that's going against you. Now, next trade is in CCI. This is a multiple leg order. So to keep this simple for you, we had sold the March 130 covered call, and we simply rolled that 130 call out to July. So we had to go out even farther than BLK. So we had to go out to July. We kept the same 130 covered call strike price. And then we had a cash secure put option at 140 and also at 135. We were able to roll both of those down by $5. See, the 140 rolled it down to 135, and the 135 cash secure put option rolled it down to 130. So let's look at the chart here to see why we did that. All right, so here you see the chart, the daily and weekly chart of CCI, Crown Castle. And here's our 130 strike price. You see our 135 here. So it broke through this 130 area several weeks ago. It then served as resistance for it. Now it's come back down. It's testing this little area here where it traded sideways from October through about November. So for about a month, it traded sideways here back in the fall of last year, early winter. So now it's back at that area. Now if it breaks through that area, the next area of support is right here around 121, 122. If it goes below there, then we're looking at some new lower lows on the weekly and the daily chart of recent history. So we'll have to see how that plays out. But with it breaking below there, I wanted to get our strike prices down, so now we can make this 140 cash secure put option disappear. And now we're just short the 130 and 135 puts. So definitely improved our position here, in a better position, even if CCI continues to go down. And we'll just see how the next month, several months play out for us. So now our next option here was AVB, Avalon Bay Communities. Let me show you what we did here. Kind of a similar trade to CCI in that we stay with our same covered call option, the 165 strike. We see we just rolled it from March out to April. So it's nice we only had to go out 1 month. But we improved our additional cash secure put option. It was at a 175 strike price. We were able to roll it down to 170. So we improved that by $5 and still pocketed $183 minus commissions. So let's look at that here. So again, we are now at the 170 put and 165 call. So 165 call is right at the money. Today it closed at 165 and 70 cents. So right at the money. We see AVB is showing some weakness. It's now made a lower high. And now it's made a lower low. See this low from right in here. Now today's candle was lower, and it's doing it on pretty high volume. So expect AVB to decline some more from here. And we were able to roll this 175 cash secure put option down to 170. So we got it down quite a bit. And the fact that we're able to walk away with the credit, well, that's one reason why I like trading options. When positions go against you, you're able to repair them and still walk away with money. So it's a great business to be in when you can deal with positions that still get paid when they don't go your way. All right, 3M. Boy, this guy's really been getting hammered the past year. But let's see how this turned out for us. So let me pull up the chart here. Now we had sold the 110 March cash secure put option and the 110 covered call. This is a position, again, like these others, that we were in a covered call as well as a cash secure put option. And we're at the 110 level. Well, 3M broke through this area of support, as you see here, around this 107, 106 area. This has served as support for it back here in October. It advanced nicely, and then it's just been trickling down. And now today, the past few days, it's made a new lower low, broke below that area of support. So I definitely wanted to get this cash secure put option rolled down in case it continues to decline, because it really is not looking good at all. See, our next major area, I switched over here to the monthly chart. Our next major area of support is right here, this yellow line, which would put it around 98. So very likely that 3M breaks below 100. We'll see how it plays out. They do have earnings coming up in the next month or two, so we'll see how that plays out. But we're happy to get this strike price rolled down, the cash secured put option, and we still pocketed decent money. Pocketed $2.87 times 2, so over $500, $560 or so we were able to pocket. And we got our cash secured put option rolled down. Now we'll see how the next month plays out. We only had to go out 1 month, so we'll see how it plays out. Finally, Walgreens. Walgreens has been a roller coaster the past several years. It's up and it's down and it's way up and it's way down. So now we're in a new downward trend. So let's see the trade that we did here. So we had sold a couple of different strike prices because I entered these positions slowly. I built them slowly. We had sold for March the $35 cash secure put option as well as the $34.50 put option. And we rolled both of them down to 32.5, but we had to go out to July to do that. So let's take a look at the chart here. So you notice here we were at 35 and then the other one was around 34.5, but we got that rolled all the way down to 32.50. So even below where it's at now, even with the big decline over the past couple of days, it's declined right around 8%, as you can see here, just over the past week or so. We're able to get that rolled down and we're actually out of the money again. And today was a nice doji. So the buyers came in and bought the stock up as the seller tried to push it down. So we'll have to see if that holds. It's actually the highest candle that we've seen in quite a while. Highest green candle and highest candle altogether, including the red candle, except for the one nice strong day here back in January, the end of January. So are the buyers now coming in to buy? Maybe. I'm not totally convinced yet. It looks like the next major area of support is probably going to be around this 32.5 where we sold it. So we'll see how it plays out. Over here in the weekly chart, it looks a little more bearish. See strong volume on the down weeks. So we'll see how it plays out. But I was happy to get this rolled down from 35 to 32.5. And now we're back out of the money. We have some room for it to go down more and we'll still get a win. So we have one more page of trades here. So EQR, this was a cash secure put option. We had sold the March 17th 62.5 cash secure put option. And with the weakness, I decided to get it down. So we rolled it down to July, $60. So let's look at this chart here. All right, so here we see EQR, Equity Residential, had made a nice higher high, but now it's come down and it hasn't quite made a lower low, but it sure is right there at it. The sellers came in and pushed this down hard today. Buyers bought it back up. Looks like it closed the day around 61, 63. So remember, we got our strike down to 60. We had to go out to July to do it. But we did improve our position, and now we're just above where it closed today, right in here. So we had to go out several months to make that happen, but we're in a better position. So I like where we're at now, and we'll see how the next few months play out. Now, NEP, this is one that energy company that really is just kind of tanked the past. It had a big drop, leveled off for a few days, another big drop. So my decision on this is that I'm just going to let this go turn into a covered call. So we had sold the March 17th $70 cash put option, you see represented here by this line, and actually came in today and sold the $65 call option. So $5 below where we're going to buy it at. And the reason is that you see that NEP found support right here around 64.5. The problem is it broke through there today. That area should turn into resistance when it comes back up. Now, of course, anything can happen, but odds are more likely than not that will turn into resistance, at least for a short period of time. So I sold that $65 covered call in anticipation of it being assigned to us next week. But just in case something wild were to happen, I did buy for protection the $80 call option. So our max loss would be $15 per share. Of course, we've collected $2 here. We collected some money when we sold our cash secure put option. And I think the likelihood of NEP rebounding and heading up to 80 is very slim, but there's always a possibility. And that's why I just spent that nickel and bought the $80 call option to cap our loss if something wild were to happen. All right, MPW, medical property. This is another one that's been on a wild ride, and it broke through some support, and a nice support that had been served as support for several times. October, served as support for it back in December, served as support for it last week, but this week it decided to come down, tested it, held for a day, held for 2 days, but then broke below it today on high volume. So because of that, I decided that we're just going to go ahead and roll this cover call strike price down to $9. We kept the same expiration, April 21st. We just bought back the $14 calls because they were only 3 cents. And we actually got nice premium when we sold these call options. If I remember right, it was 40 or 50 cents per share. So that was nice premium. And now we collected another 57 cents today. So although it's gone against us, right now, medical properties is paying a nice dividend. There is some concern with it possibly lowering its dividend, which is definitely a possibility. But for now, it's paying a nice dividend, and it's a company that I still like. They're having some problems with their tenants, but so far, I don't see anything fundamentally that makes me want to get out of it. I like having a piece of hospital ownership in my portfolio. So we rolled it down to 9. Should be an area that should serve as resistance when it comes back up, but we'll see how it plays out. But we collected a nice premium for that. All right, now we have Lazard, LAZ. So Lazard was in a really nice uptrend. Higher highs, higher lows, looking great on the daily chart, looking great on the weekly chart, higher highs, higher lows. And then today happens. Big down day. Now buyers did come back in and bought it up some, so not as bad, but now we've made a lower high and we've made a lower low on this daily chart. So because of that, we had sold the March 38 and the March 37 cash secure put option, and we rolled both of those down. We rolled the 38 down to 37, rolled the 37 put down to 36, but we had to go out to June. So all we've done is we just improved our position. So there's the higher one, the 37 we rolled down to, and then the 36 is right in here. So I like that we were able to improve our position, and we walked away with $1.80 per share. So nice premium there for getting this rolled down and out. Now we're in a better position, and we'll see how it all plays out for us. All right, the next position is MDT. And this is a covered call we've been in for quite a while. We've collected a lot of money on MDT. Our out-of-pocket is well under $70 per share. But it showed weakness today, so I decided to go ahead and roll our covered call strike price down from 80 to 77.5. So had been a nice uptrend here. Higher highs, higher lows, looking great. But today it broke through this little trend line right around 82. And now we made a lower low. Now it's retesting this area of support from back in December. We see it's right at the area of support. What I don't like though is it's been really strong volume as MDT has declined. So not looking good. We'll see if it holds. If it breaks below there, then I'll most likely roll this strike price down. But right now, we rolled it down to 77.5. And the reason is that that's this area right here, 77.5. Notice that's an area that had served as support for it. So again, it should turn into resistance when it comes back up. But in the meantime, we collected $1.80 per share to get that rolled down. So I was happy to get that. All right, well, 2 more trades, SWK. So this is a cash secure put option. We were in at 85. It had been trading sideways, which I was totally happy with that. Well, look, we're gonna get a nice roll. Yesterday and today, well, mainly today, breaks down, increasing volume as the stock drops. We don't want any part of that. We want to improve our position and we want to get paid. We got paid 15 cents. Can't get much for that. Maybe a little bit of ice or something, but the biggest thing is that we're able to roll our strike price from 80, the March 85 cash secure put option, down to May 80. So we really improved it a lot. Got it rolled down to right at the money. So I was really happy with this trade. Happy to walk away with even just a little 15 cents per share. I'm okay with that because we got it rolled down by $5 and buys us 2 more months to see how this plays out. Our final trade, IIPR, before the weekend begins. So we were in a covered call in IIPR. We had sold the March $85 covered call. We simply rolled out to April and we dropped it by $5. Let me show you why. So IIPR have been finding support right around this $81, $80 area because I had an $80 covered call that I rolled up to 85 this past week. But we had this one sitting out there that expires next Friday, March 17th, 85. I decided to go ahead and roll this one down because today it broke below that area been serving as support for it. See, nice support right here from all the way going back all the way to July. It's been serving as support. Well, today, unfortunately, it breaks through that. Pretty decent selling pressure the past several months. So I decided to go ahead and roll it to right at the money. We were able to collect pretty good money, $3.33 for rolling it down by $5. We should be aligned up to, I believe, we're aligned up to possibly receive a dividend. I don't remember the ex-dividend date exactly, but got nice premium, but we had to roll it down to get that. So it's a nice day to really show you how we like to adjust positions that are going against us. That's a huge part of being a successful trader. The good trades, the great days, that's not what it takes to be a good trader. It's how you treat these trades that go against you, how you repair these positions. That's what will make you a better trader. So hopefully this helped you get some ideas on how we deal with them. And I hope you have a great weekend and we'll see you next week.